Let's say you recognize the biggest opportunity in the market, but you don't know how to trade the idea like a pro. In the past, you were correct on the biggest opportunities, but you didn't make as much as you should have. Nothing is more frustrating than failing to profit on a big opportunity in the market. Nothing. Well, in this video, live from our trading desk in New York City, we're going to help you with that. We're going to share how to trade the biggest opportunity in the market with a recent example from our markets, the US-China trade war. Stick around and learn how to start cashing in on these huge opportunities in the market. Hi, I'm Mike Bellafiore, Managing Partner of SMB Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the trading videos that we're producing for the trading community. In this video, you're going to learn how to cash in on the biggest opportunity in the market by using the most recent opportunity, the US-China trade war. This video will also teach you how to prepare for the biggest opportunity, what ETFs, products, stocks to buy and sell when the opportunity strikes, when to buy, how to add size to your position, and how to exit. Stick around and learn how to trade the biggest opportunity in the market like a top prop trader so you can grow your trading account. If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in the new window. So don't worry, you're not going to lose this video. Go ahead and do it now before you forget. You're going to learn more in a couple of hours from this trading workshop than from years of online education. So the question is, how do you trade the China war? How do you trade the China trade war? We talked about this a couple of days ago. We talked about this was the really big idea. This was potentially $1 million idea for intraday traders. And our thesis was that going into the midterms that the Trump administration needed to say something positive about the prospects of their trade war between the US and China, meaning that they needed to say something positive that the trade war was less likely to continue and that there was going to be a solution for it. And we said, if you hear something come over the squawk, if you hear something that comes across your news feeds, then you can't be thinking about what to do in that moment. You can't be like, oh, if there are positive comments about the trade war between the US and China, I will now figure out what to do. Because the easy money, while you're thinking about that, will be gone. And there is that first trade to it, reacting to the headline news. And this has been a big trading opportunity. We have seen in the past the market react very negatively when the trade war between the US and China has been escalated. We have seen sell-offs. We have seen weakness in the marketplace across the board when the Trump administration has escalated this fight, right? So this is a factor that has concerned the marketplace. And so we said, hey, if we get one of these announcements that makes it feel like we're going to have a solution, or more likely that we're going to have a solution, we got to be ready. And so the question is, we prepared for this, all right? We talked about this. It was 2 days ago. We said exactly what to do, right? We talked about guys who are really gaming out what to do in great detail. The elite traders on the street are thinking about this opportunity. They're thinking about what to buy. They're thinking about how to buy it. They're thinking about where to buy it. They're thinking about how to add to it. They're thinking about the different scenarios that can play out if the news hits the wires. And I think this is a pretty smart level of preparation because, I mean, just logically, the Republicans really want to win the Senate and they really want to have a fighting chance in the House. And this is something that's not playing well in certain regions of the U.S. This is definitely harming the Republicans' chances of retaining power. And so, why wouldn't they come forward and at least make it look like there's going to be a solution? And why wouldn't there then be a pop in the marketplace after this was announced, and then the administration come forward and say, we're solving it. The administration can come forward and say, look how strong the stock market is. Look how much money you're all making in your pension funds. So smart politics. And look, this is not about predicting that this was going to happen. It's really about preparation. And the preparation that goes into this beforehand is really what it's all about. So we talked about this in pretty good detail a couple of days ago. So what do you want to do? When there is an announcement that hits the news feed, that it's more likely for there to be a solution. It doesn't have to be that there's going to be a solution. It just needs to be that there's more likely going to be a solution, and you'll get that pop. All right, if you had a solution, you'd pop more. But the idea that we're making progress towards a solution is good. And so what you want to do, and what we talked about a couple of days ago, was you want exposure to the marketplace. Okay, so, and I'm going to say this to you guys, not from how you attack this as an advanced trader. I'm going to talk about how you attack it as a developing trader. How do you realistically handle this opportunity? Because look, the reality is that there's a bandwidth issue here, right? You can't cover yet 20 different names at the same time or 20 different products at the same time. You can't. But you can probably cover 3. You can probably cover 3 pretty well, right? And so what you want to do, and what we talked about, is you want exposure to the overall market. You buy SPYs immediately. You set a stop at a responsible level, but you gain exposure to SPYs. All right? You literally push the buy button. I'm in. You do what next? And I'm going to give you like 3 simple steps as to how to trade this particular opportunity. What do you do next?
You look for a China ETF.
Good, 100%. You look for exposure to a China ETF. So, and there's good options, okay? You can buy yen is a particularly good exposure, leveraged product. What else can you buy? You can buy Asher. FXI is another one of these ETFs that you guys can buy. And so, when you all were preparing, I think picking one is fine. I think you pick one and you say, I'm either going to buy XFI, I'm going to buy Asher, I'm going to buy yen. But when it hits, you hit the buy button. You're in. And then what else do you want? What's the third thing you want exposure to as you're developing?
Volatility.
You want exposure to volatility. You want to short volatility. So what are some products that you can what products were you thinking about, Justin? TVIX, what else? VXX, UVXY. The easiest one to trade is VXX for a newer trader. But if you picked TVIX or UVXY, I don't have an issue with that. But that is what you all in this room, at a minimum, you should be long the market, short volatility, and long China ETFs. And so, and look, more experienced guys will think about dipping their toes into BABA. So we saw some of the guys on the desk buying BABA. You've been calling out some of the small names that are starting to go up in some of these Chinese stocks. I noticed a little bit of a bid in IQ. There was that NIO. So that's something I think a more experienced trader is going to start adding, and we'll be able to cover more names, and we'll start to look at more opportunities like that as well. And I think an experienced trader would also think about buying IWM, which has this big, what's the big level you're looking here, Ryan? That we need. So this 152 is a big resistance level. So an experienced trader will be sitting there saying, should I add exposure to IWM? How do I feel about the resistance level here at 152? The experienced trader will add some risk with Qs. Experienced trader will spread out their volatility products a little bit more. Experienced trader will, I would think BABA would be the first, it's probably the first market stock that traders went to. So an experienced trader would add a leg of adding some market exposure with a market stock. So there's two trades to this, right? The first trade is you're the first one in, or close to the first one in. You're reacting quickly. It hits the tape, boom, you buy. And you know exactly what to buy. And with the technology here, what you guys really should be doing as well is you have a basket teed up, and when we hit the wire, you hit the button, and it does everything you need to do. You're just, boom, you're in. All three at once. You can build that. That's a good exercise for you, Ryan. So you can do that. And then, you know, what happened in this particular play, and this happens in a breaking news trade, is you get the pop, and then you start to get people saying to themselves, well, maybe this headline isn't as good as we wanted it to be. You know, maybe this is already priced into the marketplace, and you start to get some confusion. The market has bounced from 160 all the way up to 172 in SPYs. Maybe this is the time where I take some profits. Maybe we sell on the news profits, and you start to get some people in the marketplace who think like that and start selling and selling and selling, and so you'll get a pull-in. And that's your opportunity number two. That is a harder trade. Using VWAP is very effective. You sit there and you watch SPY pull back into VWAP. You use VWAP as your guide. And you can see here it pulls into VWAP, leaks a little bit below that, which is not uncommon. We're going to get people who are a little confused. We're going to get people who think this is an opportunity to sell. We're going to get people who maybe bought at sketchy prices in the short term and are being pushed out because they got in at bad prices. So you're getting all of that. So don't be surprised if we leak below VWAP. And then you watch to see if you reclaim VWAP. And so trade number two and risk on number two is we reclaim VWAP. You watch the pull-in. You want to see the pull-in with declining volume. You want to see the push higher on increasing volume, and you see that, right, Justin? We get the push in SPYs with increasing volume. You get the pull-in with declining volume. We get a little bit of a leak below VWAP, and then we reclaim VWAP, okay? And then we add risk on again. And so, you know, across the board, you put some more risk on with market stocks. You put some more risk on with volatility. You put some more risk on with one of the China ETFs. So, you know, for sake of going through this exercise, let's take a look at TVIX. So you have that, just broaden that out. So you have that whoosh down, you get that push a little bit above VWAP, you get the reclaiming of VWAP, you short a little bit more when we reclaim VWAP, you set your stop above the high, which you want to set your stop above 52 there. That's 52, right? What's the top of that, the move, Justin?
50, 80?
Nope, the other one, so we pull in. Yep.
49.90.
Okay, so you set the stop above 50 after we reclaim VWAP. And what's VWAP out right there?
49.60.
All right, so you put some more risk back in there at 49.60. You set your stops above 50. You add some there. You take a look at some of these China ETFs. So let's take a look at Let's take a look at XFI. So type that up. As we're pulling in and as the market starts to get above VWAP again, as SPY starts to get above VWAP again, as volatility starts to trade below VWAP again, that's when you want to add to your ETFs. That's when you want to add to your China ETFs. You actually don't even have to wait for those to start going back up. As long as the market is showing you signs that it's holding on, you put some more risk on there. And I think one of the things you can think about doing is maybe I want to actually get a couple more names in here. So you can poke at Asher, you can poke at Yin a little bit if you want to, and maybe you want to go from 3 to 4 stocks. But those are the 2 trades. Right away, and watch us pull into VWAP and reclaim VWAP and add risk. And now we're in a trade to hold, and so we're going to use our exit rules for trades to hold. So we're going to look for trend lines to break. We're going to look for an acceleration to the upside that's too vertical. We're going to be listening really closely to a tweet from Trump, perhaps, that says, no, we're going to talk to China, but we're going to be really aggressive, and it may not work out, and if it doesn't work out, I'm fine with that. You're going to look for some intervening event where now it's less likely for there to be a deal. And so that would be a reason to get out of everything. If you're coming up against really strong, clear resistance on the tape where we just can't get above a certain level, that's a trade decision as to whether or not you want to take off some stock or some products. All right, so big opportunity today. How many of you guys in it? Everyone? Everyone's in it? Okay, good. And look, that's because we talked about it a couple of days ago. That's because not only did we talk about it, but we talked about specifically what we want to do. All right. Kind of an easy trade, right? Because we were prepared. And a really big opportunity, right? So easy money can come when you do the work. So go ahead and click our subscribe button so you don't miss any of the trading videos that we're producing for the trading community. Please add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, trade well.